Moving on, China's trade with Iran and key Gulf economies took a sharp hit in March as tensions around the Strait of Hormuz escalated. Official customs data shows that imports from Iran plunged 48% year-on-year, while exports collapsed by 90%. The impact extended across the region, with China's exports to 8 Gulf economies falling 57% and imports dropping nearly 33%. China's oil imports from Gulf countries fell 25% year-on-year in March as crude shipments were curtailed. However, increased supplies from Russia, Indonesia and Malaysia helped limit the overall decline in China's crude imports to just about 2.24%. Not all commodities were cushioned. Sulfur imports, heavily dependent on the Gulf, dropped about 42%, highlighting vulnerabilities in specific supply chains. China has already announced a ban on sulfur exports starting May 1st. The broader implications are building. The Strait of Hormuz is no longer just an energy transit route, but an active geopolitical pressure point, and that's keeping insurance and shipping costs elevated. With a fragile ceasefire nearing expiry, risks of renewed escalation remain high, and the crisis is already being described as the most severe one as far as the oil supply shock is concerned, with rising energy prices, fuel shortages, and supply chain stress that is impacting major economies. With no clear breakthrough in US-Iran negotiations, volatility in global trade and energy markets is expected to persist in the weeks ahead.